Hello and welcome to the Stock Planner channel. Today I want to talk about three stocks that fit into Elon Musk's vision for the future. Everybody's talking about Elon Musk's rockets and robots, but nobody, or hardly anybody, talks about the companies quietly running in the background that will be needed for Elon Musk to succeed in his vision. They're operating behind the scenes for the future. And these three companies, I think, are at a buy at the moment. In the case of Microsoft, which I think is a very important company in terms of AI and other software aspects, it's been beaten down lately. Amazon with its robots, again, it's at a level where you can afford to buy it. And these are long-term trades, by the way. And then the last one is Google. Ticker symbol GOOL. Excuse me, GOOGL. You know, space travel, humanoid robots, and AI will not work without cloud computing, data centers, and a lot of automation. And that's where I want to take this story today. So today we're going to be looking at the fifth division of Elon Musk's vision. These are stocks that don't build rockets, but are very important to build those rockets. Microsoft, Amazon, and Google aren't space companies, but without them, Elon Musk AI-driven future doesn't scale up, not in the time frame that he would like to do it. Right now, tech stocks are not doing well, but I do think if you look and you're looking beyond 1 year, 2 years, 3 years, these companies will be around for a long, long time because they have companies that have been built on a great foundation. They have a moat, that they do unique things and are needed for Elon Musk's vision for the future. Let's move on and get started with our study. I intend to analyze these three stocks and make a recommendation on how you can sell a put. Now, you have to have a little money for this, okay? Each one of these is going to require about $3,000 in your account, but these are long-term trades that I think are going to be safe for the future. Let's get started. Now, Elon Musk thinks that in the next 10 to 20 years, a lot of the jobs can be replaced by AI and robots. And the traditional workforce is going to change dramatically. A lot of people fear that. He feels that money could be lose its importance because goods are going to be very, very prevalent. I don't think money is going to change. Money has been around for time immemorial, and there's always going to be that greed factor. Money's not going away. But he thinks it's going to be a better world with AI and robotics, and it can make the world better and the cost of living cheaper. And you can have more time to do your hobbies and have fun and be with your family. That's important. And he thinks that this technology and its future vision could eventually eliminate poverty. That's something to look forward to. But it's all going to take money, and it's going to take companies like Amazon, who are doing the robotics and producing a robotics factory and shipping centers, and Google and Microsoft that are producing a lot of AI software and capabilities. So these companies are all entrenched in this Elon Musk future. Microsoft with its AI, robotics factories, its shipping centers from Amazon, Google with its Gemini and robotics. They're spending a lot of money, and some of that money being spent is not showing results right at the moment. That's why the price of the stock has nosedived recently. The first stock I want to talk about is Microsoft. Looking at a free tool called FinBiz, looking at Microsoft on the daily time frame, and you can see that Microsoft has been in a downward trend. It's currently below its 14-day or 20-day SMA, the 50, and the 200. And that's normally saying it's in a downward trend. But there seems to be a little bounce there. And I don't think Microsoft is all that weak of company. So it's going to stop somewhere. This is called a snowflake. And you want it to be big and green. And it is. A very healthy company has a long, robust past. The future, maybe not as bright as some of the other stocks. But right now, it's definitely an undervalued stock. And it pays a dividend. So you want this to be filled out. And this is as filled out as it's going to get. It's trading about 9% below its fair value. But this is after a big drop, as you've seen. It's nowhere near its all-time high. And for this year, earnings are forecast to grow about 13%. And that's less than it was in the past, but this is still okay for a tech company undergoing some change based on the fact they're doing a lot of investment in AI, not making as much money. Yeah, the capital spending the money on AI development, which will result in some very good profit in the future. If you believe Elon Musk, and I'm kind of an advocate for that. And the bulls say that Microsoft is a leader in AI infrastructure and applications, and I think that's true. OpenAI, ChatGPT, I'm loving it. So in Elon Musk's future, which is SpaceX, Tesla, Optimus, Starlink, if that's the body of the future, I think Microsoft and Azure and AI is the nervous system of that network. Space missions require real-time data processing, and Microsoft is there for that. And Azure is in a lot of government and defense and space already. The problem with Microsoft is investors think it's already reached its maturity. It's not a growth stock. It's going to grow slowly, and they're attracted to more other stocks that'll grow quicker and have a greater return. But I like Microsoft because it either has a slow grind up or a slow grind down, and I can predict that and use that to my advantage, especially in selling puts. Microsoft has extremely high margins. A lot of enterprises use Microsoft products, and this has a recurring profitability variable. It's revenue that Microsoft can count on year after year. So I think everybody would agree that Microsoft is very, very dominant in business and government, and this AI growth on top of that makes this a very, very strong company. So what I would like to do is sell a put out to June of 27, which is about a year and a third from now. It's currently trading around $403, and I'll sell a $390 put. Now remember that $390 put. It gives me a credit of $4,000. Now this margin requirement is about $7,000, but I'm getting $4,000 in, so it's really about $3,000 that I can't use. And as long as it stays above $346, I'm going to be happy. This is the win area here, and it just has to go up from where it's at now. Now this is a trading view chart on the daily time frame again, and there's that downward slope. This indicator here is called a zigzag. Now it's a perfect indicator, but it repaints itself. That's why it's perfect. You can't use it to trade. But as soon as the zigzag doesn't know what it's doing, and it doesn't know it right here, it's waiting, to get more information so it can be perfect. We all know somebody like that. It's looking like it might want to try to go up. Here's your RSI. That's a normal indication it might go up. And it looks like the MAC wants to cross over, but it hasn't yet. So a lot of people say you have to wait. But there's 390. As long as this stock expires in this area here, and it's spent a lot of time in this area, and I do believe it has a chance of getting back to the 500 range, we have a winner on our hands. And just say it fills this gap, the gap down here, and that was it, earnings, gap down during earnings, and just say it goes back to 460. 460 is right here. Just say it goes up to that, and I think it very well can. This is your win line for that. And I suspect it'll go up very soon. So the return could be a possible $2,000. That's sweet. I'm optimistic on Microsoft. How about you? Leave a comment below. Well, the next stock I want to talk about is Amazon. E-commerce. How does that fit in with Elon Musk going to Mars? Well, if you're going to build factories and farm or mine, you're going to need the help of these guys. Amazon has AWS. It can do AI modeling and training. It's developed a lot of autonomous systems, and it has done space data analysis. AWS. That's a big profit center for Amazon. Robotic warehouses. Man, they're looking neat. That's just what Elon Musk needs. And Amazon has tied in with a lot of satellite networks and global data. So investors have shied away from Amazon lately because they don't understand the business. They don't understand the margins. And everybody thinks of Amazon as an e-commerce site. They don't realize the importance of AWS. Let's take a look at the chart. But before we do this, let's look at one more thing. Let's look at Simply Wall Street and the snowflake. Right now, Amazon is great value. It's 40% below its estimated fair value. It's a healthy company, a pretty good past history, past performance. Future's iffy, according to the analysts, and doesn't look like there's a dividend. And the analysts are in good agreement that stock should raise about 37%. That's good. Earnings are forecast to grow 16% this year. Ticker symbol AMZN is Amazon. Daily time frame, each bar is a day's worth of data. And you see this big gap down here right around earnings. And it's been stabilizing, but has not started to go up yet. And we're assuming that this is the floor and support. And then if you believe in the 50% retracement rule, we're hoping it goes up to about 220, fills this gap. 220 and support at 205. Let's see what we can do on a trade. Amazon at 205. That's what I think I remember. That's our support. And 220. 220 is right in this area here. If it goes up to there, you can bring it home and put it in your pocket around $800 to $1,000. And it has to do that by July, or all the way out to June of 2027. You need about $4,000 in margin, and you can put in your pocket to use for your margin credit $3,000. So you're consuming about $1,500 of your margin. Got to stay above 174. So we said if it gets up to about 220, we can take in $800 to $1,000, and we want it to be above 205. What do you think of this trade? It seems like Amazon spends a lot of time in this area, and that bodes well for our anticipation or expected 220. The analysts have this as a buy under trading view, and they think it can go up to as high as 375. A lot of them are at 283. We're currently at 204, 205, and we needed to go up to 220. So I think our expectation is right on the money. Amazon, e-commerce, I believe it's needed for Elon Musk's vision and will be a backbone to Elon Musk's future endeavors. Plus, it's a very strong stock, here for a long time, very profitable. So the last stock that I want to talk about is Google, ticker symbol GOOGL. And you can see it had a tremendous run. And right now it doesn't know what it's doing. That's your zigzag. And it seems to be pulling back. Is this support at 295? I hope so. In the case of the other two stocks, I've been trading those quite often. Microsoft is my favorite, and Amazon. This one, not so much. The RSI is below the 30. That's normally an indication that it's oversold, but the MACD is still heading south. The technicals say for Google, it's sell, sell, sell. The analysts say buy, buy, buy. And they think it's going to go up to 375. 375 is up here. I just want it to go up to about 350, back to where it was. And I'm only going to wait until next year, June of 2027. Now, most people think of Google as a software company, YouTube, Maps, Google Maps, Earth, computer vision type stuff, Google Glasses, autonomous driving, and AI. They have their a very good AI development tools. Investors ignore it because they don't see this as a company that go do space travel. They think of it as a software advertising company that generates its revenue from advertising, ads. It's not seen as hard tech, and that's a big mistake. Google owns the data that AI models will need. Robotics needs mapping. Looking at the Snowflake, healthy company, slightly undervalued by about 7%. Great past history, pretty good future. Earnings are forecast to grow to about 12% this year, and they have grown in the past to 32%. It's still a cash engine, strong company. It's something I want to be invested in. The problem is the growth days are over, a lot of people believe. and this is going to be one of those slow grind stocks like Microsoft. That's okay. Let's see if we can find a trade. Google's trading at 311. I'm going to go down to 280, and that requires me to have $3,000 in margin, and $3,000 I'll put in my pocket. And if it goes up to 350 like I want it to, I can take my profit along this line. And my break even is as low as $250. Let's see how that shakes out. 250, somewhere around there. There's where I wanted to go to take my a couple $1,000 out. I'm hoping this is support and this stock will go up. I've given it a lot of time. And what do you think? What do you think of this trade? And by the way, I do have a little watch list for small accounts. Developing. Tesla is one of those. Google, AMD, Amazon, Lockheed Martin, Northrop Grumman. And I want to pull back to about in here before I go buy. And it's expensive stock, so I not recommend that right at the moment. But these three I am. Microsoft, Amazon, and Google. Can't go wrong. Hey, leave a comment below. Subscribe. Do your own due diligence. Do your own work. Learn it and win. Let's have some fun. Happy trading. We'll catch you on the flip.